What's up, everybody? I hope everyone is doing well today. I wanted to give you another version of market insights, give you an update on the market, how it's performing today, and also talk about value investing. A lot of investors out there are looking for a way to derive income when every company out there seems like they're either slashing, cutting, or suspending their dividend. I'm going to talk about some ways you can find value in your portfolio coming up next. Hello everyone, my name is Paul Zachary Shelton Jr. and I'm the Chief Investment Officer of Warwick Advisors. We are a wealth and investment management firm located in Orlando, Florida with clients all across the United States. If this is your first time coming to my channel or seeing one of my videos, I ask that you please hit the subscribe button. Please like this video, please share this video to help me increase the financial literacy of our globe. I also want to offer to you a free financial planning cheat sheet. This financial planning cheat sheet will give you an asset allocation that you can use during this current market environment that we are in right now, I should say. And it will also provide you with a base point of your financial health currently and give you some points and tips on how you can increase that. If you are interested in that, please leave a comment below or shoot me a direct message and I'll send that over to you. It's completely free. So let's talk about some ways that we can derive some income in our investment portfolios. First off, let's go ahead and take a dive into what the market has done today and where we stand currently, and then we'll get right into that. After a large jump at the start of Tuesday's trading session, the S&P 500 failed to close above 3,000. It traded above its 200-day moving average, but it did not close above this level. The market softened at the end of the trading session yesterday, and it seems like this is something that we're going to see going into the end of the trading session today. Going into this morning, the futures markets pointed towards a stronger open, and it appeared that with a 1.5% jump in early trading in the S&P 500, that the Dow would be poised to close above 3,000 and close above its 200-day moving average. It still looks like it may do so, but not exactly sure which direction the market's going to go at the close today. However, stocks flip-flopped during the lunchtime, the midday portion of the trading session. The S&P 500 erased all of its earlier gains. 3,000 appears to be the current resistant level. You know, as of yesterday, we breached it, we got above it, but we could not stay above it. We opened up above 3,000 today, but it looks like we're going to see some more volatility in the market, or at least some more bears trying to distract the close and keep the S&P 500 from staying and closing above that 3,000 level. As this index, the S&P 500, continues to test this level, investors will wait to see if the market can close above 3,000 and close above its 200-day moving average to give it support for another leg higher in the market. So what we saw today in the market is that the classical stay-at-home stocks that did so well over the last 30 days or so are starting to lose some of its luster as the country continues its reopening process. So we had Zoom, Netflix, Shopify, Amazon, and Teladoc. They all experienced a high level of volatility in the trading session today. It appears that there has been a rotation that we've seen over the last few trading sessions out of those stay-at-home names as they have been classified during this pandemic so far, and to more of the brick and mortar names that we have become more accustomed to. You can see from this chart here, Amazon was trading down nearly 3% before retreating from its lows in the middle of the trading day. This was a similar theme across all of those stocks that I mentioned earlier. Also with Shopify trading lower at about 5.5% in the midday trading. The positive prospects of the economy reopening provided tailwinds for the financial sector. So looking at this chart here, this is the XLF Financial Sector ETF. It was higher by about 3%, a little over 3% in the midday. It is believed that the economy once it reopens, more commerce will drive the economic engines and increase the demand for capital, thus providing a backstop and growth for the banking sector and the financial sector of our economy. So let's get to what I really want to talk about with you guys today. So it's oftentimes where you have situations like this where you're going into a recession and there's a lot of uncertainty in the market. This is typically when many companies will start to cut their dividends and start to pull back on sharing that wealth with the investor, just to make sure they shore up the financial needs of their own company. So with the large number of companies suspending or cutting their dividends, it's left many of us thirsty, and especially many of those value and dividend investors or income investors. It left you thirsty and searching for yield. We're in a very peculiar place right now, because typically when dividends are cut, there is a nice sizable rotation where you can find some yield in the fixed income space. But as of right now, all of the whole yield curve was under 1% a month ago, but most of the maturities on the yield curve are still yielding under 1%. The 10-year treasury is at 0.67 right now, and it is drifting lower as of today, with all of the tension between the US and China. Additionally, yields all around the globe, in every country, most of the developed countries, are drifting toward zero, and many of the developed countries and economies out there are nursing negative rates right now, negative yields. So you really don't have the yield curve to fall back on. I mean, you could go out there and search for some junk bonds, but you can get yourself in a good amount of trouble as the economy turns if things do not turn around positively. And if there is a spike in coronavirus cases in the economy or the country or the globe has to close again for a month or 2 months or however long it will be, that will be detrimental to those companies that are out there providing those junk bonds and those high yielding investments. So you really don't want to go that route either. So where is one place that we can extract some yield in the economy? You look at this chart right here. This is the XLRE. All right, so this takes me, when I think about extracting yield in a situation like this where many dividend paying stocks are being cut, reduced, or taken down, I tend to look towards the real asset portion or the allocation of my portfolio, specifically real estate. The average yield for the REIT index is about 3.73%. That's as of right now. And the difference you may have to understand is with stocks, the board of directors can and oftentimes do vote to adjust the dividend policy to maintain the financial security of the company. This is different with a real estate investment trust. A majority of the taxable income received by the real estate investment trust is disseminated out to the investors, and by mandate, 90% of the taxable income for REITs must be paid to investors. This maintains a certain level of income, I should say, for your portfolio. Now, it is possible that with the shift that we're seeing away from brick and mortar, the retail apocalypse that we have seen over the last several years, and additionally with just the overall appetite of the American and global consumer shifting away from shopping in stores, that real estate investment trusts like these will see some volatility going ahead. Even with any volatility that we see going ahead in the real estate sector, I do believe that if you are an investor and you're looking for yield right now, the best place and the best area to try to find that yield without having to sift through stocks that are slowly cutting or shifting away from paying dividends is by slowly and marginally, based on your portfolio, increasing your asset allocation to any real estate that you can find, any real estate investment trust. I mentioned the XLRE and I showed you the chart for that, but there are many other options out there that can provide you with some yield that can help you maintain some of the income in your portfolio. If this is your first time viewing my channel or seeing one of my videos, I ask that you please hit the subscribe button. Please like this video. Please share this video to help me increase the financial literacy of our globe. Thank you so much and have a great day.